There we go. Hi, guys. Welcome to Rebound to Riches. I am Bree, and I am here with two amazing women that are joining me. I'm going to start with Coach L. Coach L, tell us a little bit about what we're going to talk about today, and please introduce our guest.
Sure. Hello, everybody. I'm Elle. Wanted to really, I'm so excited to introduce you to Reem Kadem. She's my mentor, and let me tell you how and why we met. Uh, as you guys know, I'm a relationship love coach. I work with people, mostly ladies who come in, and we work on their codependency, and a lot of times is financial codependency. So I decided to understand finances. And then somehow, through my other friend, I met Reem, and she's a financial consultant. She works from through her heart, and she works with people who really want to financially be free and retire financially wealthy. So, and because of that inspiration and meeting Reem and understanding how it works and the way she explained it to me, which was like openly in a way that I understood, I also became a financial consultant and I work under her supervision, and I'm learning at the moment. But I wanted her to come in today and really just tell us a little bit about how can we retire financially wealthy? What are annuities? I mean, these couple of
Sure.
different things that it's always a good question of understanding how it works. So, Reem,
Well,
welcome.
first off, thank you so much, El Abizadeh, because it's such a pleasure to work with you. I love that you work with life coaching, relationships, and now you're coupling this in to help people with some major pillars in society, financial growth, understanding that, right? Because I truly believe, folks, and Bree, I want to thank you as well. Bree, thank you so much for having me here today. I'm sure everybody knows you, Bree, but do we need to properly also say more about Bree for a minute before we start? Bree?
They kind of know me
For
around
anyone
here,
tuning in.
but that's all right. No, I partner with Coach L because I feel like there is that whole entire package that we're never serving. We always look at the one thing, or it's our health and we want to work on that. Hey, I'm trying to do the whole thing. I want my life well rounded because I know each individual section of my life supports the other, right? If I'm struggling financially, I could be eating really, really healthy, but the stress and the things I'm going through with that are going to take a toll on my health. So I need to have a balance with everything that I'm doing, a balance with my work, a balance with my family, a balance with my health, and a balance with my finances. I think they all
Yes.
go together so well. And so that's why I was really excited to have you on the show today,
Thank you.
because we really need to look at all aspects of our life, and financial is so important. And I have to say, probably the least understood. So I am just here for anything I can learn today, because I need it. So let's go.
And we all need
Well,
it.
thank you. Thank you so much. And, I love what you just said because, financial literacy is so slim in our country. And it's unfortunate because people are not learning the basics. I'm going to go back to Elle's question in just a second. But really, back in school, right, people would tell you put 10% away, put it in your bank account. How is that helping people in society when really your average bank is giving you under 1% interest earned? Okay, let's forget the high yields. Let's forget those CDs. I'm talking, I mean, even those are not beating inflation. So it's really troublesome for people in America and across the country in every state where they're trying to grow their money, but their money is not working hard for them. Right, Bree? Right, Elle? So for anyone watching today, this could be some very insightful new information that we go over, but it could also be something you might be familiar with. Maybe you've heard of it before. So just briefly on myself, without boring anyone too much, I want to get into annuities and your question, Elle, but just for anyone who might wonder in terms of my background for a second. Number one, my father opened one of the first check cashing businesses in San Diego. So I grew up with a business family. My dad has been a business owner for over 40 years. I was fortunate to grow up in beautiful San Diego, in La Jolla. And I honestly wasn't seeing myself in life as somebody that would be a financial consultant. For anyone watching, by the way, we are expanding across the country. We are considering people during the hiring process, and we offer complimentary financial analysis. So with that being said, I really want to make clear that I realized really like that there are pillars in society, and that there are three major ones: your health, your emotional and relationship health, your physical health as being the first one, then the emotional, and then your financial health, right? And so when I saw my father suffer in the crash of 2008, and I'm sure we can all relate. We know so many people that suffered from the crash. We know so many people that lost a lot of money. My dad washed his hands of investing in the variable market. So to be able to help educate people in locking in their gains, and this leads me in the transition, L, of your question on what is an annuity, locking in their gains, offsetting their risk, being able to grow wealth without losing it, especially people that are nearing and in retirement, hold the phone. That's what Americans need. And many Americans don't realize what they are. Now, I've sat with people that have Charles Schwab, Vanguard, you name it. Okay. All these big firms out there, and God bless them. But at the end of the day, there are still clients that are in their 60s, in their 70s, I sit with, and they don't even know what an index annuity is. So let's get into that. So an index annuity, the power of what we do is, let's say someone has a 401k, Bree and L, right? Let's say the client has an IRA. Let's say it's a lump sum amount. At the end of the day, if we can move a portion or all of that money into an account that has a floor, number one, we're going to keep it simple today, folks. It has a floor. It mirrors the market. Okay. So you're not in the market anymore. You're moving it from the S&P. You're moving it from the IRA that's in the market, and you're taking it into an account that now is mirroring and crediting you year to year. Okay. That is how an annuity works in general. Now, there are different bells and whistles. We have a lot of amazing institutions, A-rated, top of the line companies. By the way, we represent like over 40 top firms, from Nationwide to North American to American National to Transamerica to Mutual of Omaha, you name it. Okay, so we're very fortunate. Our company, Experior Financial, is a brokerage that really helps people in financially looking at solutions. Right? We're not just a product order taker. At the end of the day, there's a lot of companies out there that are taking orders. Let me just take an order and give them one product. That's not what we do. So going back to the annuity conversation for a minute, let's say somebody wanted a guaranteed income. We can help them do that with an annuity. Right. Let's say somebody wants just to accumulate their wealth at no fee. Okay, I'm not a fan of fees, folks. Let me tell you, I'm not a fan of fees. However, a fee is appropriate on a yearly basis at usually about 1% or 1% and change, if it's offering something specific to the client. As an example, if it's giving you something where if you can't do one of 6 active daily living activities, you can't bathe, you can't get from one place to the other. We have annuities that, without having to go through long-term care qualifications and major health qualifications, they're going to double, they're going to multiply your investment and allow you to have multiplication in, let's say, a 7-year payout. God forbid you needed that later. So on top of accumulating your wealth, you have that. That's a good reason to pay a fee. Does that make sense, Brianelle? That's a good reason to say, you know what? I will give the insurance company an extra % a year. Okay. And it's not coming out of your bank account or something. It's just off the top. Okay. If you get a guaranteed income for life, I'm going to say that again, for life. Yes. The person lives to 101 because they did stem cell, right? They're going to get a guaranteed income. If that guaranteed income, folks, is $5,322 a month, they're going to get that guaranteed income for life. And the older you are, this is very important. The older you are, the higher the guaranteed percentage. Okay. So I hope I answered a question on annuities for a minute, L, and I'm going to bring it back to you to ask me anything else, but I hope that clarifies on a general front. And for anyone who wants to know more, please book a time with L and myself, and we'll give you a 30-minute complimentary analysis.
Yes, that's what I was going to talk about. That we're here, Reem and I, both of us. Of course, she's my mentor, so you can have a complimentary analysis of your finances, and we can talk to you about annuities and wherever you are, life insurance, whatever it's best for you. And we are in here to really help you to get to the space of what is best for you and your life. It can be different with different people. So that's the key. The other thing I wanted to also talk about is what's the difference between annuities, like having a saving account, correct? And a lot of people say, oh, I'm going to invest in real estate. that's good too. But for people who are really not savvy about finding the right property, having to deal with people who are your tenants or whoever they are, this is the better way of having a saving account and having that income coming in, because you just sit there. I mean, isn't that correct, Reem? You just have
Okay,
that.
I lost you for a minute, lady. Sorry about that. I'm back. I lost you.
I'm just saying that instead of having a real estate investment, which you can have that as well, but then this one is an easier income generator account, because it gives you that the percentage on a yearly percentage, and it doesn't go. You can pick that 5% or 4%, whatever it is, and it just stays with you for that throughout. So if you can explain about that.
Can you clarify that last part of the question, Elsa? You're saying so people put money in real estate versus an annuity. Is that what you're saying?
Yes, and those,
Okay.
because it's unknown. Real estate goes up and down. Your tenants will leave. They trash the place. I mean, I have experienced that.
Sure. Sure.
But annuities, it's kind of a saving account that it's guaranteed.
Yeah.
That
Exactly.
means that you get that percentage on a yearly basis. So if you want to talk a little bit about that.
I love that. So, and then, yes. So here's what I'll say. Number one, because there are different types of annuities, we have a guaranteed floor. You can always count on a guaranteed floor with an index annuity. Now we have different bells and whistles. Let's compare real estate for a minute and what Elle is saying. Number one, it's the variable market in real estate. Like Elle said, folks, nobody's knocking real estate. Okay. Real estate is great and everything, but at the end of the day, sorry, it's a variable market. You're going to have ups and downs. It's not always reliable. There's going to be, situations that are unexpected. Listen, my mom is a loan officer. I know that world well. Okay. My brother's a real estate investor. I know that world well. But I'll tell you what, my brother, even in his 30s, has insurance vehicles for cash accumulation. Right. And so when we're looking at these components, when you look at something that gives you security, we're not saying put all your money into one account. It's diversification. So, and what Elle was talking about, ladies and gentlemen, is let's say you have an annuity. Okay. There are accounts that we do have also, like the guaranteed income. We have accounts, for instance, that let's say the market did 0% or higher. But even if it was just 0.1, you could get over 7% guaranteed to you as a return per year. Now, if anyone's listening on the call, that may apply to you as something of interest. That might apply to people you know. Maybe it's your mom, it's your uncle, it's people in your life that are nearing and in retirement. Because these annuities, by the way, have a 59.5 rule. And I know we're going to touch on life insurance and all that in a minute to compare it all. I think we've said we want to touch on that. But here's the beauty. It's a great thing depending on suitability. So you might think that everybody at these companies, at insurance companies, will just accept your investment. They will not. They want to make sure you're suitable, just so you know. So let's say you are suitable. Okay. It's just a few questions, right? Different things that we need to look at, liquidity, assets, etc. But when we're looking at that, ultimately, it's a good thing to have your buckets in different accounts. You don't want to have everything in one bucket. I think we can agree on that. So the idea is, yes, guarantee is huge when it comes to offsetting your risk. It also comes down to tolerance. How much can you tolerate looking at? I mean, trillions of dollars was just lost in the market the other day. Was it like 1.9 trillion that they announced? So at the end of the day, how okay are you with that? Okay. For anyone watching me right now, for anyone watching us, how okay are you with, if you have $500,000, if you have $1 million in the market and tomorrow you lost 300,000, what is your tolerance level? Right. And at the end of the day, even if you have a higher tolerance, I recommend you consider offsetting your risk a little bit, because you don't want to be in that position where all of a sudden you've lost so much of your investment. Back to you, Elle.
Yeah. Bree, do you have any questions?
Well, I really kind of wanted to back everybody up just for a quick second, because I want people to understand you guys are talking, I'm just like, I'm recognizing all the words, but I want people to understand what we're talking about. When you talk about a floor, what do you mean? And when you talk about an annuity and moving their 401k into that, what does that mean? Because I think we hear a lot of these terms, but we really don't understand, how does that apply to me? What are we talking about? And why do I need to understand those terms?
Oh yeah, I love that. So great question, Bree. So number one, not everyone can move a 401k. Okay, I'm going to say that again. Not everyone can move a 401k. The general rule of thumb, and there's little ins and outs when it comes to that, but the general rule of thumb is this. If it is an old 401k, Bree, and let's say it's at your old employer's facility, office, you can move that 401k. That's low hanging fruit in our business. Okay. So as a consultant, when I hear that someone has an old 401k, I know that I can mobilize that 401k. Okay. Now, when I look at age and all the rest, that can play a role. So let's say somebody is, I don't even know, 25 years old. Okay. We're looking at different scenarios. Annuities are really going to be, minimal age is 30s and up. Okay. Because remember, there's the 59 and a half rule and you can't access your money till then anyway. And if they can ride the market early on when they're super young, they're probably going to keep it in the market in their 20s. And usually annuities don't allow someone to move it in their 20s anyway. Okay. That's number one. Number two is, let's say you have a 401k and it's with your current employer. Okay. General rule of thumb, you cannot move that 401k. It is with your current employer at the moment. So oftentimes people want to do that, but it's out of our hands. Now, here's the exception on that as well. The major exception, it's called an in-service withdrawal. Okay, so if someone is over 59 and a half, I have helped clients do this. Let's say they're 60, Bree, and let's say they're 65, whatever the case is. They're now on the verge of retirement. They're still at their job. And they say, you know what, I want to move it even though I'm still here at my office, my work. We can move that account into an indexed annuity as an exception because they're over the age. Does that make sense, Bree?
Yeah, it does make sense. What if you have employer contribution to that, right? So
Sure.
if you do move it, does that affect the employer contribution?
Yes.
Okay.
Okay. Absolutely. How could it not, right? Mm-hmm. So it's going to have an effect on that because you no longer have the 401k there. Now, if you move a portion of it, because you're able to move a portion, okay, but this only applies, remember, if they're over 59 and a half with your current employer. If it's an old 401k, it's irrelevant. Nobody's contributing, right? Okay. So if it's the current 401k, you can move a portion. Now it goes back to the employer sometimes too in a conversation, but it should be fine in terms of some employer contribution at that point because you didn't move all the money. Okay. Now I oftentimes, listen, I'm going to say it. Time magazine came out with the problematic aspect of a 401k. These are tax deferred. In a state like California, Bree, are you in Cali?
Absolutely not.
Okay. Where are you at?
I'm in Minnesota.
Okay, Minnesota. All right. So at the end of the day, that's right. You're in Minnesota. We talked about that. At the end of the day, state tax, federal tax. In a state like California alone, folks, are you ready? Okay, you could stand to pay over 50% in taxes if you fall in the highest income tax bracket. Now, I want to welcome the thought process of tax-free distributions. I'm not just talking about Roth IRAs, folks, because you still have a 59 and a half rule. May I jump into that for a minute, Elle? I know you're going to ask me that, but I want to do a quick comparison for everybody. First off, have I answered that question properly for you, Bree?
Absolutely. Yeah, that was very helpful.
Good.
Thank you.
You got it. And this is a little bit more high tier, folks. So for those of you listening, this is a little bit more of an advanced conversation today, but I love it and I welcome it. So with that said, let's talk about, listen, the Rockefellers, we've heard that name before. Okay. Walt Disney, we know. Let me just say something, folks. Walt Disney was rejected by the banks. He went from bank to bank to bank. You can Google that. And guess what? He decided to pull money out of his life insurance policy and he invested in the happiest place on earth. Tell him which place that is, Elle.
Disneyland.
Disneyland, which by the way, even as an adult, I'd like to go back soon. I really would. Okay. Listen, you're never too old to go back to Disneyland, right? Okay. So that's pretty amazing when you think about that. He invested in Disneyland and it was a tax-free ability for him. Now, how does that work? First off, just to compare it, and we can sit down with you to get more specific, folks. So those of you who are like, I've heard of infinite banking before, that term infinite banking. Yeah, I have heard how you can have, tax-free wealth in retirement. You can have access to tax-free money. Life insurance retirement plan. It's known as a LIRP. Okay. And it's also a rule that was enacted back with Ronald Reagan. Okay. So you can look into this. Okay. So at the end of the day, this is a very powerful tool for the right person. Now, the number one qualifier for that is, tell them, Elle, what is the number one qualifier? It's an H word.
The age?
Yeah. Health. Right?
Health. Yeah.
Okay. Health. So we have to qualify people with a life insurance plan in general. Yes, it's one of 3 ways, only 3, folks. Those of you might be sitting there going, I didn't realize that. Only 3 ways in retirement to grow your tax-free money. Roth IRAs, okay? Let's talk about that real quick. 59.5 rule, it rides the roller coaster, okay? And you cannot access early on. You're going to get penalized by Uncle Sam. And it's still in that volatility, but ultimately it can fit for different folks. It also has limitations. You make too much money, can't invest. They will not let you have it, okay? Because Uncle Sam knows that, listen, if you're making too much money, why should I let you have a Roth IRA? You're not allowed. That's just the reality, okay? I'm not knocking Uncle Sam, but we know Uncle Sam has rules, okay? And so ultimately then there's municipal bonds. Municipal bonds are not going to grow against the I word. I have clients right now with existing bonds. Unfortunately, they're getting what? 2-3% fixed return. How are they beating inflation? That's the question. Okay. And then they're not, right? Exactly.
So,
and then we have, oh yeah, go ahead. I just wanted to throw in one thing. Go ahead.
No, I wanted to hear more of this. The only thing is we have limited time here.
Sure,
now.
Go for it.
But Bree, how many more minutes do we have?
Oh, we have about 4 minutes left, but I mean, it's like, so here's what I'm getting from all of this.
Yes.
And I appreciate, Reem, you just, the amount of information that you have. Is just like
I hit him with a lot.
Okay. I like that. I like that. It's not a lot of malarkey and fluff that we don't need. It's like straight to the point. This is what we need.
Sure.
I don't know about you, but if you're watching this, you got to be thinking like I am, which is I need a longer conversation. I need more information and I need specifics to my situation. And I will tell you, I am dealing with my in-laws who did everything right. They saved, they paid for things. They have perfect credit. They worked hard their whole lives. And now in their 80s, they're having financial issues, which they should never be having because they are not being able to protect their assets and protect the things that they need and make sure that they can pay their medical bills. Right. And it's I'm seeing it and it's tragic and I'm trying to scramble to help them. But I also know that I need to look at what I'm doing right now at my age so that I don't run into those situations. And it's time to take control. So you can do everything right. You can plan, you can have all of those things. But if you're not doing the right things and getting the right guidance and getting the right instructions on what exactly should I be doing and getting that guaranteed income as I age and get older until I'm 101, let's hope and pray that's what happens. I'm going to be in a really rough situation. So it begs me to say, please contact these ladies. Please have conversations because this is so vital. It is one of the most important things you can do for yourself today and in your future.
Thank you so much. And 30 seconds on that, Bree. I so appreciate what you said. I have to tell you, folks, over 65% of elderly people end up in a form of long-term care. We help people offset that. Instead of you saving money aside, we have chronic critical terminal protection in our policies as well as standard protocol, as long as you're approved. And that is huge. It offsets your risks. You're not going to have debt at the end of the day. You're not going to deplete your retirement at the end of the day. And that is essential. Going back to your parents, Bree, I can imagine that it makes you think about that a lot.
It does. And it's scary. And that shouldn't be a stressor right now as they're going through things, right? With my father-in-law in critical care, like he is in that kind of care situation now. And how do we pay for it? And what do we do? And they'll end up taking the house when I run out of funds, and the pensions that they have, won't cover it. Social Security's getting, shut down or, reduced. And how are they going to survive? And they're going through this whole traumatic medical situation. Don't put
Tough.
yourself in that situation. Don't
Yeah.
let that happen. Be smart now so that you
Yeah.
can guarantee the future that you need and deserve for all your hard work all your life.
Amen.
Yes. So I wanted to ask Reem that if she would be able to come back maybe in a couple of weeks again, and then we
Love
can
that.
go ahead and talk about. And if you guys have any questions, I'm sure that yes, Reem and would be happy to do a one-on-one. But if you have any questions that is simple, you can just send it to us, and then on the next time that we have this live event, it's going to be probably in a couple of weeks. I'll see Reem and Bree when it's a good time, and then we'll do it again because this is informative. It's essential for everybody who's as we grow. I always say we grow younger, but at the same time we grow older too. So it's good to know what our options are, how we can help ourselves to get to that space of comfort
Amen.
and being able to take care of ourselves in that medical field of.
I agree. Thank you so much, ladies, for having me here today. I would be more than happy to come back and make this a regular thing every couple weeks. That would be awesome.
Okay.
Thanks,
So much.
everyone.
Thank
Thanks
you.
for watching. We'll be back tomorrow with more advice. And who knows, maybe this will turn into a regular podcast if I can talk Reem into it. Thanks for being
Why
here.
not?
See you next time. Bye.
Thanks,
Thank
guys.
you.